on November 9th, Pete and I were discussing Meta. And at that time, we both had some interesting opinions that I'd like you to hear. And by the way, the stock was 105 on November 9th.
101.
101.
Let's get started, Pete, with Meta, because we both said all Zuck had to do was cut back on CapEx and this thing would be up 10% in a week. Well, I guess we underestimated it, Pete, because it was almost up 10% today when he announced cutting 13% of the workforce and keeping a hiring freeze through the first quarter of next year. What's your take? Would you give it a shot again to trade to the upside further?
Well, I can tell you this, John. We did see some call buying right out of the gate today in Facebook, and that was sort of something interesting. That's a little freebie unusual right there. But I think that the interesting part is, John, to your point, he did what people said that he needed to do for quite some time. He needs to pull back a little bit from what they're doing and sort of reallocate and redecide on what they need to really be doing. It is extremely a fundamentally sound company with great cash flow, all of that to be true. So yeah, I think it actually could, sustain a little bit more to the upside, John, but people still got to know how much more money are you putting into Meta?
We're back. So that's what we said then, Pete. And I think it was pretty damned accurate. And as you said, the stock was not 105, it was 101 when we said that. Today, it's $192 a share. And in fact, Pete, it's up somewhat, $26 or something today.
Unbelievable run.
No, $40. What am I saying? $40. Multiply 40 times 2.2 billion shares, and you get the idea that they doubled the amount of money into the company market cap that they announced the buyback of 40 billion. They could make it 80, Pete, because that's how much the stock's up today.
And that was one of the big reasons why it was jumping the way it was, John. I think when you look through the numbers, you go through the numbers, one of the things, of course, is they talked about efficiency, right? I mean, we already talked about the jobs before back in November and what they were going to be having to do to make sure that we were convinced. And you and I were definitely convinced they were on track to do the right thing. They did the right thing. Year to date, the stock went from 121 all the way up to today. You were talking about 192. That's a pretty incredible run. Fundamentally also, John, even with this run, when you look at what the PE is for this company, what the free cash flow looks like, what the debt and what the cash looks like, the company is absolutely crushing it. And they even beat the numbers on the daily active users. They got to 2 billion. And it's just an amazing thing in what they've been able to accomplish. I love the balance sheet. They've done a great job. Oh, by the way, a Bank of America analyst really went out on a limb and decided to upgrade it today. Oh, that's just freaking great. Where were you yesterday, the day before? I mean, honestly, you wait until you get the number. That to me is ridiculous. But we see that all the time in the markets, John, where they wait, and that's not what you have to do. If you want to be a part of these kind of moves, you've got to make those decisions about what they're doing and how they're doing it. You and I talked about that in November, and bang, here we are.
Yep. You have to be able to put it on the line every once in a while, Pete. Yep. And the nice thing is, folks, when Pete and I do that, we're doing it with an option that we have defined the risk when we buy that option. Now, some people will never buy an option, Pete. You and I know who they are, but they will just sell a put. They won't ever buy, but they'll sell a put. So to all of you who sold the 100 put or the 90 put, congratulations, you got a couple bucks. You missed about $90 of upside, but congratulations. By being so penny wise and dollar foolish, you got more or less what you deserve.